Hi everyone. Today let's talk about my options portfolio and some trades that I'm looking at for the upcoming week. So I'll talk through some of the stocks that I'm looking at, starting with XLE, GLD, SPX, talk a little bit about Uber, as well as Pinterest, and SLB, which is another oil and gas company. I may throw in a couple of other stocks as I go along, but those are the main ones that I want to hit. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this and individual stock reviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. So starting with XLE, you can see the Spider Trust Energy ETF. You can see it's had a very strong run over the past couple of months, going back even further, basically doubling from $27 all the way up to $56 per share. And it's been one of the year's top performers so far. Had a little bit of a sell-off over the past couple of days. Currently, I'm looking at this as a buying opportunity, and that we'll see an extension here in the energy sector as we continue to see demand go higher as the economies around the world get back into the full swing of things. To me, part of this looks like a Fed sell-off, because if you heard the Fed comments, they said they're basically not concerned with inflation, which tends to affect energy companies to the downside because they want to see inflation go higher, which allows them to rake in higher margins on their products, which as a result would send their profits higher and their stocks higher. There is a little bit of resistance here at the $54 range, which is basically right where it's getting stuck at $53.90 here on the first day of the week. But in my opinion, we might see a little bit of choppy action, but I expect to see new highs continuing through the end of the year. Moving over to GLD, or the Gold Trust, to me this looks extremely oversold, well below the third ATR level here. Basically been stuck in a holding pattern for the last 3 days, again similar to energy off the Fed comments. But in my opinion, this is a way to make money in terms of selling puts here to the downside if you don't have a put position. Ideally, you have enough capital to take possession of these shares if necessary, but this would be a large position. Just over $16,000 to buy 100 shares here. Kind of large, but you can trade credit spreads here just because gold is generally not very volatile, and you don't need to put the full $16,000 up right away. And again, in my opinion, this is pretty largely oversold. Looking at prices we saw in April and then all the way back here in February around the beginning of the year. My expectation is that we will see a stronger move higher, at least back into the normal trading range around 170, once the market readjusts to the new Fed comments. Next up is SPX. You can see we've had a couple of dips here in May and another dip here in June based off the Fed comments, which it seems like we are retracing that dip all the way back into the green after that pretty bad Friday. If you zoom in here to the 4-hour chart, you can see what that looked like. Pretty large sell-off well below the third ATR level on the 4-hour, which generally indicates you're going to see at least some form of reversal. Right now, we're stuck at this midline, which is quite a bit off of those lows and actually a little bit higher than I thought we'd see in the first day of the week. Like I said, I expected a reversal, but maybe not quite as strong as we've seen here already, which indicates to me that this bull market is still strong. We did retest that 144 EMA on the 4-hour chart, and since then it's been straight up basically all day. Looking at the hourly chart, we're all the way up at that second highest ATR band, and I do expect that we will get stuck at the third ATR band, if not basically right where we are. This was a very strong move today, but it's not as dramatic when you consider the sell-off that we had on Friday. Otherwise, I continue to remain bullish on SPX or SPY, however you want to think about it. Moving on to Uber, you can see they've had a pretty rough go of it since April, where we reached all the way up to $59 per share, sunk all the way down to $43 per share. This was kind of the sell-off in tech that we saw across the markets. Growth was hit pretty heavily based on the rising interest rates, and since then we've rallied back up to kind of a mid-range on that dip, where we've trended down much slower, and now we've had a pretty decent sell-off compared to the rest of the markets. As I just showed you, the SPY is up pretty dramatically. But here on the last two 4-hour candles, you can see it's been straight down, almost touching that second lowest ATR band, looking like some pretty oversold territory. You can see the RSI is already down at 28 on the 4-hour, indicating some oversold conditions, which in my opinion is a good time to sell puts, and it puts you in a good opportunity. If you do have to take control of some shares, you can buy them at much cheaper prices. And I'll touch on my position that I picked up today a little bit later in the video. Another company experiencing similar price action is Pinterest. Was in that very overbought territory for quite a while. rallied all the way up into that upper ATR band here on the 4-hour, and basically held that position all the way up until this morning, where we had a sell-off down to that $70 price range, with the lower ATR band sitting around $66 per share, which is a price we saw earlier in June, which is evidence of the pretty dramatic rally we've had here in Pinterest, as well as some of the general volatility with this large spike down from around $74.50 all the way down to just above $70 per share. And lastly, for the ones I mentioned on the intro here, we have SLB. This is an oil and gas company, a little bit smaller company, but it's had a pretty dramatic rise going all the way back here to around $25 per share just at the end of April, and currently trading at $33 per share in mid-June, with the highs right around $36.70 per share. But you can see that that was based on these really dramatically overbought conditions, well above the third ATR band, which for me is not a condition where I'm looking to sell puts. It would have been successful, at least in the short term, but then you can see we had a really large sell-off touching that third lowest ATR band here, continuing sideways and then selling off again, further all the way down to around 31.30. And then we've had a bit of a retrace back up to 33.15. In my opinion, this is going to be a continuation of the bull trend. We just need a little bit of a cool off after this very strong rally. It seems like we found a bit of a bottom here with an impulsive move up at the beginning of this week, which puts a price target for me at around $35 per share. Another stock that I'm pretty bullish on here is CrowdStrike. You can see it's currently sitting in the middle of this ATR band. If you haven't heard of CrowdStrike, it is a very strong, well-managed tech company that focuses on endpoint security, and it's done very, very well, going all the way back to mid-May here with the tech sell-off, settling around 170 all the way back up to 237 currently. As you can see, this bull trend is still intact, even with this pretty dramatic sell-off here today. In my opinion, this is just a cool off since it's been sitting in this upper ATR levels for quite a while, and it's currently only sitting here in the middle of this range. I wouldn't mind seeing it go a little bit lower, maybe 10 points or so down to 227 from 237 before I'd like to enter a position. Right now, the options I would look to trade are sitting at around a 210 strike, which you can see is well below 4-hour price action. But if we do go over here to the daily chart, you can see is still above that second lowest ATR band, right around here in the middle of these moving averages. That would represent a pretty dramatic move down, but as you can see, we've had similar moves here from April into May. And this is still a pretty high level on the daily chart in terms of entering a position. Something like this would have been a good position when we were sitting at 205, 207. Then you can see we had the bounce off that midpoint back up to those upper ATR levels. Definitely on my watch list, but entering now would be a little bit aggressive for me. Moving over here to my Robinhood portfolio, you can see I moved some of this money over here into Tastyworks. I was sitting about $2,500 higher, and I did move that money over because I do trade this as a little bit smaller of an account. So if you trade a smaller account and you use a broker like Robinhood, this is a better example for some of the position sizes you could take. Otherwise, you can see it's done very well, up just over 7% here in the last month. This is a little bit inflated because I decreased the amount of money in this portfolio, so it makes the percentage go higher because of that, but it's still done very well in terms of dollar amount, making just over $766 on a relatively small account. Otherwise, looking at the positions here, you can see SLB, one of the companies I'm bullish on. I do expect it to expire higher than $33, as I mentioned. If not, I'll roll this out in time and collect more credit. This is actually 2 contracts because it is a little bit smaller stock and the volatility is not super high. And I only got a 23-cent credit for this. So it's currently in a loser right now of $36, but I was in a much bigger loser going into the end of last week. But I continued to hold on because this is a stock that I'm bullish on. Otherwise, Tattooed Chef, a little bit of a profit, $10 here. Wendy's, another stock that's been doing really well here. Kind of on a meme stock bender, but otherwise still a good company. In terms of fundamentals, probably one of the best meme stocks out there. DraftKings is another very bullish thesis. Internet gambling and sports gambling continues to expand across the United States, and DraftKings is one of the leading companies in that industry. GE, another company that's doing pretty well today, up just over 2%, thankfully. Did have a pretty rough end of the week last week, as did most of the stock market. But as long as it closes up over $13 per share, this will probably be the last time that I trade this stock because they did announce their reverse split, which is going to make every 8 shares into 1 share, which makes this stock very expensive and not something that I want to trade options on. I was pretty bullish on GE, but at this price range, it is pretty much priced in for what I thought it would do. If it does see a little bit of a sell-off after the reverse split, maybe I'll trade it in my larger account. But for now, I would like to see this expire out of the money, collect my little bit of credit, 20 cents here, and move on from GE for the year. Next up, we have NEO. NEO had a pretty decent sell-off, and you can see that sell-off here going from a little bit over $47 per share all the way down here to $45 per share. Again, a reasonably priced stock with some pretty strong growth potential. Otherwise, looking at Pinterest, you can see I was a little bit too aggressive here, took an 80-cent credit, and I could have gotten more credit. It's already sitting at 132, but it is down 5%, which is a much better entry than what I could have taken at the end of last week when growth stocks had their pretty strong rally. You can see my strikes are still down here at $64 per share, and an 80-cent credit isn't terrible. Putting my break even at $63.20, not bad off of current prices, but could have been better. Then we have silver, still bullish on silver, and didn't take quite the hit that gold did. And it's a much cheaper product here at $24 per share, something that's more appropriate for a smaller account. Then we have Snapchat, still bullish on Snapchat, and then Uber that I already mentioned. I actually picked up this position today on the sell-off, and I'm sitting down here at the $44 puts, and I got a 50-cent credit for that, so my break-even is $43.48. Pretty good entry in my opinion, especially based on the charts previously. If I have to take control of these shares, I'm not opposed to doing that at just under $44 per share. Otherwise, I'm only putting up $350 to make $50, which is a great risk-reward ratio, if I am correct. Otherwise, I get the shares for around 10% less than they're trading for right now. Moving over here to Tastyworks, you can see I've had a very, very good Monday. A lot of this is because it was a rough end of the week where I did see some pretty significant losses, but even still, very good gains here today, sitting up a little bit over $1,300. So strong Monday. Otherwise, looking at my positions here, you can see my bond position here. I actually rolled this out in time because I did see some pretty decent profits, and I expect bonds to be pretty stable here going forward. Apple stock continues to rally and provide some decent gains. I'm actually losing on the covered call side because this is a poor man's covered call, and Apple has been rallying pretty aggressively. I'm not sure how much it'll hold up, but we'll see. My break even on this call is actually at right around 134. So if it goes $2 higher at expiration, I will be losing out on a little bit of profits, but you can see here on that 4-hour chart, we're getting into that little bit overbought territory, and 134 here in the short term would be pretty overbought in my opinion. Moving on to AMD, another stock that I'm pretty bullish on. I still have a lot of room to be right, and this is definitely a stock I'm willing to buy at these lower prices. It's the only stock in my portfolio that's down a little bit where I have a pure bullish play. Bonds are down, you can see here, but that is a strangle. Otherwise, I'm bullish here on Boeing, up quite a bit today, and my break even is way down here, well below $220 per share. Disney was testing my patience a little bit, getting pretty close to my strikes, but again, this is another company that I'm okay with purchasing, and I do think it has a long bullish road ahead of it. Ford was down at the end of the week. This is a pure naked put. Really, this could be in my other portfolio as it is a stock that is pretty small and something I could definitely take as it's around $1,500 to buy that stock at this price. Otherwise, still comfortable buying it at that $14 strike, and I got a 43-cent credit for that. Gold, this is really another stock that I'm getting tested on. I rolled these puts down and out, and I took right around a max profit on the call side because this was an iron condor previously. As I mentioned, I think gold is oversold, and I think we'll see a little bit of a move up, at least in the short term. Lululemon, another very bullish play for me, sitting at $353. I've been talking about this for a while. Ever since their earnings, I've been very bullish. And you can see my strikes are all the way down here at 305 and 300. So my break even's right around 290. I expect this to be a max profit, but if it goes a little bit higher, I'll probably look to get out of this position as it's almost in a max profit right now, as it's in most of a profit at 173 out of 255, but we'll see. Still very bullish on that long term. Realty Income, another naked put at 175.50. The stock is just above that strike here, and it did rally today. Thank goodness, got a little bit of money back, still in a losing position. But again, this is a stock that I would like to own, and I'm willing to accept these shares at 67.50. Simon Property Group, another kind of a growth real estate play. Small profit here thanks to the rally today. Again, I would like to see this expire out of the money. If I had to accept the shares, I would, but more reluctantly than Realty Income. And lastly here, we have a poor man's covered call on SPY, currently sitting at $130 credit at 125. So this gives me a room for around another 1% up move. something that I'm comfortable with accepting for a little bit of downside protection. Let me know down in the comment section if you get any trade ideas out of this video. Definitely like and subscribe if you got any value out of this analysis, and hit the bell so you don't miss out on any future content. Of course, none of this is financial advice, and you'll probably lose all your money if you follow any of my trade ideas. Thanks for watching and have a great day.